Can you hear me now? Okay, let's just start. Okay, that's great. Okay, sorry about this, and I apologize. We had some technical problems. Again, and this is Charlie Tian. Hope everyone's doing well. And we are now 2 months into this year, and we have experienced quite a lot. If you look at the market has been very volatile, and now we have the war going on, and which is not very optimistic. We don't know what's going on. But on the other hand, the market is getting much cheaper than before. And hope everyone will be finding good companies right now and get prepared when the opportunity comes. Today, I want to share with you some work we're doing, and we're working on a ranking system. I will share with you right now. A ranking system which will help us to look for good companies and to find the best companies we can find. And here we go. Let me share the screen with you. Okay, I'm sharing screen with you, and it's called GuruFocus ranking. So we're working on a ranking system which the purpose is to help us to find the best companies. And the ranking, we will have a chart like this on the website, on GuruFocus website. And it will be showing the ranking of all the companies in different areas, like the growth, the profitability, the valuation, financial strength, and momentum. That's a 5 area we're going to show the ranking. And yeah, anytime, whenever you have questions, let me know, and I will certainly answer your questions. The ranking, the purpose of this is really help you to find the best companies, and in 5 aspects here. Okay, let me try this share screen. Okay, let me share my screen here. Okay, I think it should be working now, the sharing. Yeah, and the ranking will be in these 5 areas. Okay, it'd be financial strength, the profitability, the growth, the valuation, and momentum. These are the 5 areas we're going to rank. And I will go through each one of them and explain how it will be done. The first one is the financial strength. The financial strength is a measure of the strength of the company's balance sheet. We all know that we don't want to buy companies with deep debt. The companies has poor financial balance sheet. That's Warren Buffett told us, and Peter Lynch told us. And so we come up with a rank. It's a ranking of financial strengths, and it is already on the website. I will show you a little bit later. And the ranking of financial strengths is based on the company's interest coverage, the Pejovsky Z-score, and the equity to asset ratio, cash to debt ratio. And all these are the higher, the better. And also the debt to revenue ratio. This one, of course, is the lower, the better. And with this financial strengths, we rank all the companies in 10 percentiles. So the highest rank we have is the best 10% companies with the best financial strengths. Yes, it is a financial strength, and we're adding more. And I did some back testing. Different companies which performed with different ranks from 2006 to 2021. And we have 10 groups of companies. Each group, we look at the median point performance over the past 15 years. And we can see that the company with the lowest rank, this red line with the lowest rank, does perform very poorly. And the company with a little bit better rank, this one, it does poorly too, but it's slightly better. This green line, this thick green line, it's a company with the best financial strengths. And on average, it does do much better than other companies. But we can see that the companies with financial strength from the highest percentile to the next, even to six, about 50% of the company, as long as they're ranked above the median point. The performance, the difference in the performance actually is not that much. So this tells us that as long as the financial strength is good enough, and good to more than about 50% companies, the risk of underperforming due to financial strength is actually not that high. So this tells us when we screen for companies, as long as the rank is between 6 to 10, it'll be good enough. And there is no clear winner actually from the back testing. And this is actually, it's a compare the performance of each group relative to the average of all the groups. The one with the worst financial strength will do very poorly, and the next one do also poorly, and ranked like 3 to 4 also poorly. But those ranked well, good enough, above 5 until as long as above 5 and 6, and they're actually pretty good. The difference is not that big. The next parameter we're looking is profitability, which is also on the website for every stock, and I will show you a little bit later. And it's on the summary page. We have the financial strength and the profitability rank there. And the parameters we use is operating margin, mean 10-year mean of the operating margin. And also the margin growth, the operating margin growth, and the F score, the predictability, how predictable the company is. And we also put the revenue growth as part of it. And also the number of years the company has been profitable within the last 10 years. This is actually a very important parameter that Ben Graham uses. And the number of years that the company is profitable over the past 10 years. And also the 10-year median return on invested capital. Return on invested capital is an important parameter that Joe Greenblatt used, and we used it here, and we look at the long term. And here now we look at the backtesting results. There's a very clear winner here. If the company is ranked very high with financial strengths, it outperforms, it does the best, it outperforms tremendously. And the company with poor financial strength, poor profitability, the lowest profitability, will do very badly. So this tells us when we buy a company for long term, we want to buy the company with the highest rank of financial, the profitability. And the higher the better. This actually tells us. That's and we look at the average performance of the highest ranked, this one, relative to others. We can clearly see that this one on average is much better, and those with the poorest profitability rank will do poorly, actually, and the cumulative performance from the backtesting shows a huge difference. So when we buy companies, we want to have company with the highest profitability rank. And this is for the profitability. And there's a very clear difference. The third parameter we're looking is the growth rank. This is not released on the website yet. And we're working on this. We'll be releasing this in next month. We look at the growth of revenue growth, 5-year growth rate, and a 3-year growth rate, and also EBITDA, 5-year growth rate, and also how consistent the growth is. And similar to the profitability rank, the growth rank shows a very clear winner also. So the companies with the highest growth rank does the best over long term. And this back testing, I explain again, this back testing is rebalanced once every 12 months. And we are looking at the median point of each group. And the highest one, highest rank, growth rank, this group does the best. So although we are value investors, but it looks like the companies with good growth, profitable growth, because we are also looking at the EBITDA growth, with good growth will do better, do the best over the last 15 years. And yeah, that's average, relative to the average. This group is a company with a highest growth. And then the next parameter we are looking is GF value. GF value, I think everyone knows we have a GF value chart, and this GF value chart shows how the company current stock price relative to the intrinsic value calculated by us. And in principle, we know that when the price over GF value ratio is lowest, the company is the most undervalued. When this ratio price over GF value is the highest, the company is most overvalued. As value investors, we tend to think that the companies which are overvalued should perform poorly. The companies which are undervalued should perform the best. But actually, our study results we found that it's not the case. Indeed, the company which is most overvalued did poorly, did very poorly. But the company with most undervalued actually did poorly too, did very poorly over long term too. And the company with actually, which are about 30% undervalued. Company which are about 30% undervalued actually did the best, which here is ranked at 70 percentile, 80 percentile, which are companies which are about 20% to 30% undervalued. They did the best over long term. So why is this? I think the reason is because the company which shows the most undervalued as measured by price to GF value, many of them can be value traps. And we do warn users that they can be value traps. And the companies with very good quality, and slightly undervalued actually do the best over long term. About 20% to 30% undervalued did the best over long term. The market actually quite efficient. If you think of this, the market is quite efficient. So from this, we actually adjusted the GF value rank. We don't rank companies directly based on the price to GF value ratio, and we actually rank it in a different way. We rank it according to the back testing, and we will assign the companies with about 20 to 30% undervalued as the highest rank, which actually is this green line, which does the best. And although they are highest ranked, but they are not the cheapest companies. They're about 20 to 30% undervalued. And also this group here. That's one observation. Also, another observation is that not like profitability rank or growth rank. This is actually quite similar to the balance change rank. So the companies with from fairly valued to slightly undervalued, the performance actually is not that difference, that much difference. So I noticed that Martin is saying that it will be confusing to the screener, and we will add to the screener a GF value rank there. And the highest ranked ones will be the one which did the best in the past. They are actually not the cheapest one. They are the one proved to be the best performing group in the past. That's what we do for the GF value rank. And then another parameter we're considering is the momentum. Momentum, as value investors, we usually don't consider momentum, but momentum is an important factor which is affecting the performance of stocks, even over 6 to 12 months. And I studied this actually very closely for the past months. And for momentum, there are two kinds of momentums. Academically, there's one called residual momentum, which was studied very heavily by Nobel Prize winner Feynman and France. And they're, of course, very, very famous economist, won the Nobel Prize for that. And another is traditional momentum. Traditional momentum is more based on the stock price and standardized stock price movement, volatility. And the residual momentum, trying to remove the volatility and the factors from the market cap, from valuation, and from different from valuation from the market cap. And try to find the real residual part of momentum. But I did lots of backtesting. I found that residual momentum does not make a big difference if we ranked it into 10 groups. And the groups actually does not, the highest rank does not perform. So I don't see a clear difference from different groups. So we still stay with traditional momentum. The traditional momentum is actually, we calculated it based using we call it standardized momentum ratio, which is a ratio of the average of 12 months subtract 1 month and 6 months subtract 1 month performance divided by the beta of the company stock. The reason I divide by beta is trying to standardize it. And then we look at performance. We do see quite big difference in performance, but similar to GF value here, the company with the highest momentum actually does not do the best, which is here, do poorly. The company with the lowest momentum also do poorly. The company with the momentum ranked about 6, 7 actually do the best here, 7, 8. Then we adjust the rank again so that we rank this group as the highest rank with momentum. And we're going to publish this also in the, we're developing new filters for this, and they will be added to the all-in-one screener. And also we'll have a chart. We're developing a chart for this, for the ranking. And overall, this is actually something interesting too. This is during the, there's some irregularities here, which is the year 2009. We knew that the market crashed in 2008 and the market recovered strongly in 2009. And the company with the most momentum and the least momentum actually do poorly during the market recovery. And the company do best during the recovery are the ones with about 6 and 7 kind of momentum. Yes, we are going to add this into the fundamental page. I will go to that page and show you a little bit later. Yeah, that's a momentum rank we developed. With all these ranks, we'll have a chart like this, which shows the 5 dimensions of each company. And this pentagon, the area of the pentagon will indicate the quality overall rank of the company. Based on these all 5 dimensions, we developed a GF score. For every company, we have a score. The score will be from 0 to 100. And will also allow you to look at the historical scores. And then for the scores, for the company with all the scores, I divide them into 10 groups and look at the performance of each group. This is a company with a PERS lowest 10%, below 10, the score was a 10 below 10. And this is between 10 and 20. This is between 20 and 30. This green line is a company with scores between 90 and 100. And they do the best most of the times. They don't always do the best every year, but they do best most of the times. And then we see the different performances. Okay, sorry, the performance here. And the company with a higher score do the best. And with the lower scores do poorly. So we'll of course, the score will also be, the scores will also be included in the ranking, and in the all-in-one screener. And we look at the top 20% of all the scores. So the companies with from 80 to 100, top 20%. We divide those into 10 groups too. Then we look at performance. We can also see some difference. Actually, the company with the highest score do the best, like these groups. And the score does make a difference over long term. So yeah, that's what we do with ranking. And it's a new feature we'll be adding to GuruFocus platform. A few things I want to point out. One is not, this ranking works over long term, but it doesn't mean that the highest ranked company will do best all the time. And sometimes even the higher ranked ones will do poorly during market recoveries. And let me show you something here. Okay, I think this is profitability rank. I mentioned that profitability rank is, it mirrors the profitability of the company, and it's a very sensitive factor, and it does very well over long term. But if you look at this highest ranked ones, this group, the company with the highest profitability, it did very well in the market crash in 2008. When market crashes, the company with the highest profitability is more resilient. But during recoveries in 2009, it does not outperform that much. The reason is also because the company quality is so high, the stock does not go down, didn't go down that much. That's why during recoveries, it does not go up as much as the companies that were beaten down. So that's something you need to consider. But over long term, this score, the companies with the highest rank and the highest score will do the best. And I believe I'm a long-term investor. I believe many of our users are long-term investors too. And I hope you will like it, and we'll release this in next month, and hope you will like it and give us feedback. Any questions so far? Let me look at the comment area. If you have questions, yeah, as I said, we'll be releasing this in next month. And okay, seems like there's no more questions. And let me go to the website and okay, let me stop sharing this. Okay, let me stop sharing this. Let me share my screen, the web page instead. Okay, now you should be able to see my screen website. And this, as usual, you see the homepage, which is the dashboard. And I added something here. It's called market condition indicator, and you can add everything actually to this dashboard. You can customize it. You can add things from here. Add the articles, different areas. Can add the portfolios, different portfolios, your own portfolios actually. The portfolios you generated. Can also add the economic indicators as added here. This is a interest rate flattening curve. This is insider buy sell ratio, overall market. Those are customized by myself. And I want to show you the financial strength and profitability part. Okay, here you can see that that's a financial strength I was talking about. And as I mentioned, that this financial strength, as long as it's above 5, 6 and up, I will say it will not cause a big difference in the performance of stocks over long term. But this profitability rank here, it's very sensitive. And the companies with the highest rank always do the best over long term. And GF value here, I mentioned that not the cheapest one. If it's very cheap, not the cheapest one will not necessarily do well over long term. The reason is because there can be problems with the quality of the business. Yeah, and okay, I see questions. You will see actually the backtesting chart will be calculated every week, and it will be updated in the website. In the term, Marty, in term page, in the pages, we will display all these ranks. And the backtesting data will be calculated every week, and it will be updated every week, so that you will see the data all the time. And you will see the chart I was showing you actually in real time. Of course, it looks slightly different here. And the GF value chart, as I mentioned, the lowest company with the lowest price to GF value will be about this area, and will not necessarily perform the best. Let me try to find a company which is like that. Okay, like Shopify Inc. here. Actually from that calculation shows that price to GF value is very low. It's here, but it does not mean the stock will do the best. And we found that the companies with slightly undervalued, like I think Amazon, yeah, about this position, this kind of position, about 20 to 30% undervalued will do the best, and not the one with the lowest price to GF value chart ratio. That's a financial. So we have 3 parameters here, and we are going to add the growth rank and also the momentum rank, and we'll have that Pentagon chart, and we'll actually replace this here valuation chart with that Pentagon chart. It will be here. It will be in this area, and that's our plan for the GF for this new ranking system we're working on. And then we'll add, of course, all the ranks to here, to about here. The profitability rank and financial strength rank is already here. The valuation rank will be replaced by the GF value rank, and we will also add the momentum rank and the growth rank, and also the overall score here. That's what we're going to do. And yeah, I say that someone, okay, look, Junior, he's saying we don't replace the valuation rank, but this rank is actually, we found that valuation, as I mentioned, valuation is not that sensitive. And actually they are also available here, I think. they're available. They were available. Yeah, valuation here. They're here. Their valuation. Okay, this chart has some problem. They should be here also. And we'll first make sure that this page is working properly, and you will see it. You will see, yeah, they should be here, but the chart seems like have some problems. Yeah, we'll fix it. And as I said, the valuation is not that sensitive, and that's why we're thinking to replace this one with the one we're developing. We may put 4 charts for another one here. Not sure, the space might be too crowded, and we can consider that. Yeah, we can consider that. Thanks. Okay, that's a ranking system we're working on. And now, if you have any questions. Okay, seems like there's no questions on the ranking system. If there's no questions, I will talk about some of the screeners. We actually made some changes to screeners. We added more filters to the screeners. The changes can always be seen here on the change log here. So we add that what we've done here. We added the CIK to the Guru list. We also added the COSIP down to the API download, and we also added the 1 month volatility in the all-in-one screener, and we also added a few other ratio filters to the screener. And although we are adding screeners, but you can always add your own screener here from the customized filters. We cannot add everything, and also we got lots of suggestions. We got lots of suggestions, but we cannot add everything. And so if you want your own screener, you can filter. You can always use a customized filter here, and you can add your customized filter here. For instance, if I have a test filter here, and then I want to have something like a revenue divided by debt, revenue divided by, okay, long-term debt, for instance. I want to have a filter like this, and I want it, for instance, greater than certain ratio, a certain number, and okay, then I confirm it. Yeah, it will be added. It will be added to your system, and it will start to screen here. You can already see here the test filter. Once I added it here, it shows the companies which satisfy these results. It needs test filter greater than 10. Here you can see they're already here. And of course, then you can combine that with all other filters you are working on. All other filters, like you want financial strength is greater than 8. You can add it there. And profitability, you want to greater than 9, greater or equal to 9. Yeah, you can add it there. And then you can also, you want to look at the ROE. You don't want to filter with it. You just click, you just light up the little I here. Light up the little I here. You will see the ROE, the ROC, ROIC. And you can also see the PE ratio, everything. You can just light it up there. And yeah, that's filter. That's what we are okay. As a customized filter. Okay, let me look at the sometimes some comments there. Can we remove momentum from ranking? If you want to remove from ranking, we will not remove it. If you don't want to use it, you can use the all-in-one screener filter here. Like here, the momentum rank will be here, but you don't have to use it. But we will not remove it from our scoring because we found that it is really it is really useful. We found that it does make a difference on the performance overall. Yeah, okay. Yeah, and about valuation chart, I saw some objections there, and I understand that, and we will consider that. We will see if we can put all the charts on the top together. We'll consider that. But I think this ranking is more important personally, right? It's more important than the valuation we're talking about. Okay, I was talking about the customized filters. I hope that everyone likes it, loves it, and use it. The customized filter, if once you generate it here, you can also see it. You can also see it in the interactive. I think okay in the interactive chart. You can also see it actually not only in interactive chart. You can also see it in the 30-year financials. You can see that in 30-year financial page, it will appear in the customized filter here. Okay, should appear in customized field. Yes, customized field. Okay, yeah, I said it's called test filter. It should be somewhere here. Once you add it there, it should appear on here also. I'll make sure that it is there. Let me check. It should also appear on the, okay, probably I was wrong. But once you add it on the 30-year financial, it will appear there, and it will also appear on the interactive chart there. And you can draw the charts for the interactive charts, the customized data for interactive chart. You can draw it there also. That's about all-in-one screener. That's one important function for all-in-one screener. Another important function for all-in-one screener is historical data. I'm not sure how many people are aware of it. The historical data, you can screen from the historical data. And for instance, that's why you see the plus sign next to each filter, the plus sign here. If you click on the plus sign, here, for instance, I want to filter for companies from 2015 to 2020 to current year, actually, to current year, and the growth of revenue every year grows by 5%. I want year over year, every year grows by 5%. And then you can, and it's already worked. And after I set up that parameter, it already worked. You can see the historical sales of the companies from here, the sales. And you can see that it grows every year. Every year it grows 5%, more than 5%. And you will find these companies. And it combines with other parameters I selected before. The financial strength, the profitability, the test filter I added there. And yeah, of course, I can easily remove the test filter. I can just click on here. It will disable it. It's still there. Next time you can use it, but it's disabled right now. And you can see the results changed. It shows only the companies which has growing its revenue from 2015 to 2021 by at least 5% a year, with financial strength of at least 8. And the profitability of at least 9. And I think this, even a simple filter like this will give you very good high quality companies. Just for instance, I just click on one of them, Simulation Plus, and you can see that the performance, of course, it came down lately quite a bit, but over longer term, 2015, the performance has been quite dramatic, quite good. Last 5 years, it gained still more than 300%, although it came down quite a lot. And so this, even a simple filter like this will give you quite good high quality companies. And I try another one, Fox Factory Holdings. I have no idea what does this company does. Of course, I can check it here from business description here. It's a designer, manufacturer, marketer, performance defining product of bags. Okay, it's and then yeah, the stock of this company did pretty well too over the last 5 years. Also gained more than 300%. And of course, it came down some recently, and the price is now actually at a very good valuation, very good point actually. That's about the all-in-one screener. Let me look at any questions. Questions. User evaluation chart allowed. Okay, thank you. Can customize function? Can we then download the Excel? I think so. Once you have this, and once you add this customize filter back, I think now if you download it, you can always download it. Download it to Excel. You can download it to CSV or Excel. Once you download it, it should be in the customized filter should be in the results too. Yes, as I saw, it's actually the results is in the customized filter too. So it can be downloaded. The customized filters can be downloaded, the results. And yeah, that's about the customized filter. And we added the customized filter to the financials, to 30-year financials, and also to the interactive chart also. And I come back to the all-in-one screener. I mentioned that the historical parameter, you can filter it with historical parameter here, and it is a Premium Plus feature. And it's only available to Premium Plus members. You can, that's a very important feature. I think very useful feature too. And we also have a ranking feature. I'm not sure if everyone knows about it, the all-in-one screener. And currently, of course, you can sort it, but you can rank it. You can rank it by like ROE, ROC. You can rank it the combination of ROE, ROC. Okay, when we add ranking, somehow this historical cells is gone, but you can see that you can rank it that way. And okay, we will, yeah. Anytime whenever you see a bug or something, you can always come to this support button here. This support button, and with this support button, you can create a ticket to us. We will be able to fix it. It's support button here. And create a ticket. We'll be able to fix it. Okay, that's the ranking. Yeah, don't forget this ranking also, which is actually quite useful feature from our system. Okay, and let me. So I talked about 3 features here. One is the all-in-one screener, customized filter feature. The second is a historical data filter. Historical data filter, you can click on this plus sign. The third is a ranking we're working on. Any questions so far? Okay, seems like no questions regarding to what I'm talking about. That's good. Yeah, and we are actually doing lots of redesigns to the website. This is a dashboard. Come to the dashboard. You can set up a default dashboard, which is just for yourself, which we actually added lots of features here. This is a day change. I give you a very good overview of what's going on with the market, and this one gives you the statistics of what's going on, like within S&P 500 companies, how many are up, how many are down today. And And also one chart I like, personally like is this sector performance. You can look which sector is doing the best so far this year or today. So far this year, the energy is doing the best. Of course, we know that due to the war, the oil price has been shooting up. It's more than $100 a barrel today. And energy stocks did the best, actually, did best. Did very well also last year. And healthcare and technology, which are the sectors that did very well before, but it's not doing very well this year. And yeah, that's just how the market works. Okay. Yeah, that's what the dashboard. I encourage you to customize it yourself and make. You can use all the modules we have it here. General, your own portfolios here, and the economic data is here, and yeah, you can add lots of things here like crude oil. I just added here, and I added it's already here. Actually, I added crude oil, 30-year crude oil, and I mentioned that it's going up more than 100 today. You can see it here. Yeah, and I see a question, can we have this dashboard capability for the UF the companies? Yes, actually, that's what we're working on. This summary page, we're working on a new design for the summary page, and it will be customizable, and it will be similar to the dashboard, be customizable, and you will be able to put different parameters and charts on this page and customized for yourself. That's the dashboard we're working on. Actually, we're even for this homepage dashboard, we're trying to make it better also. And yeah, and I encourage you to actually, we are adding data also. We're adding data to this 30-year financial page. We're licensing new data, new analyst data. That's one side. Another is the operating data. And we have some operating data, but the quality is really not that good. And we're licensing new operating data, which will cover, for instance, for Apple, it will cover the sales, where the sales are from US, from Europe, from China, from Asian other than China, and also the iPhone sales, the Mac sales, the iPad sales, the historical value, at least 10 years of historical values. And that's actually what we are working on, and that's what we're working on. We're trying to get data for the operating data, and with the new operating data, you will be able to do more research, and that's something we're adding. Actually, of course, it will be. We're still talking to the data vendor, and it will take some time, take some development time also. But as always, we're trying to make it better, trying to add new more data and information for our subscribers. Any other questions so far? Okay, I noticed that you want to retire the Guru Excel add-in. I'm not sure it will be as powerful, as customizable as Excel add-in, and because it's a web design, we have to develop all the modules, so it will still have some limitations. It will not be as flexible as Excel, because it's just the limitation of the technology, different aspects of the technology. But we will do it. We will do it as much as possible. Okay. Any other questions? Okay. If there's no more questions, I will. Yeah. This is a summary page we're talking about, and I think I encourage you to use an interactive chart, create your own templates, and once you select template here, create your own templates, select your own template, and set it as default. If you click on set it as default here, yes, you confirm. Next time when you come to a different stock, if you come to a different stock, it will interact chart, and it will show the same. It will show the same chart for you, and yeah, that's what we were doing. I mean, the interact chart is very powerful, and I encourage you to use more of it too. Okay, let me look at the question. Do you see in the future you can have this data also? Not sure which data you're talking about. I put dashboard, like to additional data. Not sure which data you're talking about, but we're always adding data, and we do sometimes by limited by budget, and data is very expensive, but we're still adding data. Yeah, that's the interact chart. But overall today, I mainly want to share with you the ranking system we developed, and will be, I believe that it will be released this month, and hope that you will like it. And as always, give us feedback. Give us feedback from, you can see the chat support here. When you need help, you can always come to this chat support during business hours, and also create a support ticket here. Whenever you need help, create a support ticket or come to the chat support. Yeah, that's about what I have. And if you don't have questions, I think we will be done for today. And thank you all. Apologize for the initial technical problems. How to create email notification of certain gurus. Okay, email notifications. I think it will be here, email alerts. If you come to the top right-hand corner, you will see, okay, this Zoom is, you see email alerts here. See email alerts here, portfolio updates alerts. You can go to setting. I think the one Guru update alert, change the settings. Okay. And what you're talking about is probably the Guru update alerts. You can come here and look for the gurus or your own gurus. And once you select all of them, you should be able to add alerts here. And yeah, receive email. Once you select those gurus, you can click here, receive email alerts. And once you have that set, you will receive email alerts once there's new information here. Hope it's clear. Okay. Thank you all for coming today, and I hope to see you again next month. And I'm always excited to talking to our customer users. Current macro situation, Fed interest rate. I think Fed is going to raise the interest rate as Fed said today. Actually, even with a war, with a market downturn, they are going to raise interest rate. But I think Fed will still be mild. And I talked about value and versus growth. I think 2 months ago, and I think it's time to be more defensive. With your portfolios. That's what I think it doesn't necessarily be correct. But actually I cannot talk very much on that. Thank you all, and I hope to see you again next month.